Welcome to UEB Research Spotlight, where we spotlight research making waves worldwide. Article title: The Impact of Political Settings on Banks' Jumbo Mortgage Lending. Evidence from U.S. state-chartered banks under dual banking system. Author: Dr. Nguyen Dinh Trung, Dr. Ta Tai Hoang, M.A., Giang T. Minh Thao, Van Nguyen. Research objective: the article aims to analyze the impact of state-level political dynamics in the U.S. on the jumbo mortgage lending behavior, loans exceeding the conforming loan limits set by GSEs, of state-licensed banks within the dual banking system. The research seeks to clarify the relationship between the state's political power structure, whether Republican or Democratic controlled, and risk-taking tendencies in real estate lending. Research methodology. Data: the period from 1990 to 2015, focusing on state-licensed banks in the U.S. Quantitative methods. Plus difference in differences regression to measure the impact of changes in state government. Plus fixed effects regression model to control for time invariant characteristics of states and banks. Plus key variables: unified political status of the state, where one party controls both the executive and legislative branches, and the jumbo loan approval rate. Key findings: state banks increased their approval of jumbo loans when the Republican Party held unified control of the state government. Conversely, more cautious lending behavior, i.e. fewer jumbo loan approvals, occurred when the Democratic Party held unified power. Shifts in political power at the state level created clear fluctuations in banks' risk-taking behavior, evident in the volatile risk mortgage lending market. Notable value and academic contribution. The paper provides the first empirical evidence of the direct influence of state-level political ideology on bank risk-taking lending decisions. It highlights the role of the political structure within the dual banking system, contributing to the theories of financial risk and bank governance in a decentralized institutional environment. It suggests a new research direction in the field of political finance, particularly regarding the interaction between political institutions and banking behavior in the real estate sector. Policy recommendations from the study: integrate political factors into financial policy making. Risk management and banking regulation policies must account for the influence of political parties, not just economic variables. Identify risks from changes in state government. Close monitoring is required during state-level political transitions, as these are periods prone to risky lending behavior that can impact real estate market stability. Strengthen federal-state coordination in bank supervision within the dual supervisory system. Establishing coordination mechanisms between regulatory bodies will help minimize regulatory gaps and enhance risk control effectiveness. Adopt flexible, state-specific policy adjustments. A rigid, one-size-fits-all national policy should be avoided. Instead, policies should be tailored to the specific political and economic context of each state to ensure appropriate credit risk management. Read the full article at